Good morning, good morning. Let's see here. Good morning, everyone. Happy Monday. Well, happy Monday for the shorts. Bit of a rough go for the longs. How you doing, Ian? Ah, Risco, good morning. How are you? Okay. We're starting out here on the daily candle wax chart. Welcome to the Trading Syndicate, everyone. I'm sure it's going to be a pretty quiet session as not a lot of people want to even look at their charts probably today. It happens, right? So what we're doing is we have long cost basis over 60, 68.90. We're basically resetting cost basis. So the lows I'm looking for on the candles are down here and here. And let me just bring that up real quick. The swing lows that you folks want to be looking for. Whoop, where'd it go? Here. So I had them marked out here. So 67.75 and 65.83 are the two swing lows that will further impact downside. Till then, it's just another liquidation. Sure, it's a brand new year, right? It's a brand new year. We're resetting our cost basis. What does that mean? Well, the markets go up for the end of the year. Everyone gets their bonus, and then we get these distributions. Got to bring back price somewhere to cost basis. There's a cost basis here, and then of course there's a cost basis underneath 66.61. Either way, markets go up and down. This is how life is. Can't always have markets going straight up. You can see silver. Silver came right back to that little cost basis. If you don't have volume profile, hey Raj, how you doing? Trade maker. Morning, guys. If you don't have volume profile, here's a way to find out where. Hey AO, how you doing? Here's where you find out where the high volume nodes are. You guys like to use that word node, right? We just call it cost basis. You can see how silver came right back into that 72 area, right? And it's going back and forth here. This is where they launched their assault from, and they came right back to where they started. So that's how markets work. You acquire inventory, you go sell it, and then you put it on sale. There's nothing new. This is, it's a speculative market. Same with gold, right? Gold, you could see there's a little cost basis here, and there's a little one here for a couple of days. So it just comes right back into where it started, right? And that's just how markets work. And if gold really liquidates, you'd be looking for it under 3,600. But let's see what happens. It's a brand new month. This is the first liquidation. Our overnight inventory in the ES market is pretty much 100% short. All of the trading is underneath Friday's close. So we were talking yesterday, and I said, this is that balance zone that we had. We went into distribution. Now we are in 2 times discount. So the bottom of this zone is 68.44. That's my target for this liquidation. We stopped at 68.64 and a quarter by 1 tick, right? So the levels are working. Now the thing is, for you folks who are look below and fail traders, don't do it, right? Don't do it. Don't try and go long, right? And if you do, you better be quick because we are considerably below the Friday low. That causes liquidation. You could see it in Bitcoin, you could see it in gold, in silver, in ES, in every single thing you can see we have liquidation, right? That's just normal, right? Because these are all risk assets. And when you have risk assets selling off, you've got to understand that speculators, right? Speculators link all of their stuff together. So if you've got gold and silver and ES and all of that stuff, it's all linked together margin wise. One of them gets hit, they all start getting hit. You heard that somebody lost 300 million because they bought gold at the top in a hedge fund? Yeah, I don't know, man. That sounds pretty that sounds pretty fishy. I don't know what fund manager would buy gold at the top, but hey, you never know. You never know, right? There's a sucker born every minute, right? I wouldn't be chasing the tops. Um, that's for sure. That's definitely for sure. I would not be chasing the tops in any market. But hey, someone's got to buy the high, right? Why not have somebody lose 300 million who could afford to lose it, right? We'll see. I hope that's not the case. But people who chase price, that's what happens, right? You live by chasing price, die by chasing price. And that's why we don't chase price. And that's why I do these balance zones so you guys know where the hell to buy it and where the hell to back off, right? You have to be smart about these things. And sometimes, if you're an investor and you're looking at your stuff right now, they're not happy, right? Investors aren't happy, but it's one day, right, out of a year. Hey, Redcom, how you doing? It's one day, right? We have to reset cost basis, otherwise the speculators can't make any money, right? It's just the way the market is, right? There's speculation. So, alrighty, let's see where we're looking right now. We've got J period and K period correcting inventory up. We have our overnight point of control here. The price action doesn't look that bad. It's tradable, right? Just for new traders, just don't get married to your trades on days like this, okay? Be nimble, be quick. Don't get, don't do silly things. You have to maintain your business. Let's see. That's actually not a bad bounce off the lows. Let's see what we got shaking here. So I did some big balance zones. I used, uh, the closing balance of yesterday. I mean, Friday, we've got 56 to 76. That's a big zone. So half of it would be there. I might redo them a little later on, a bit more friendly. But, we're down 80, 90 points. It's big ranges. I could see some shorts coming in here, right? Wholesale's building a little position on top of them. That's why you've got the overnight point of control here, right? Let's see. I haven't actually looked at the charts. I did my levels, but I haven't done any serious looking. So that's what I do when I come in. Just take it easy. No reason to. I don't trade right away. Now, I know a lot of folks will get upset about that. Oh, he's not trading. Well, no, it's because I've got a brain and I actually look and see where the bids are and where the offers are before I just jump in. Um, on days like this, it's really smart to just kind of watch for a little bit before you execute, right? You know, there's smart money and there's dumb money in these markets, right? Dumb money are people who are executing all the time. They're not thinking. They're just, going a little nuts. Nice work, Jerry. Yep, that's good. I was just seeing that too. Right. So let's see what we've got. Now, we're in the middle of this 4 times discount zone. Well, Charles, that's why you're here. We'll change that. You have to train yourself for that, and understanding the business is the best way to do it. I always sound like a broken record, but I just find it very interesting that people get into this without understanding the business. And I find it very irresponsible for trading educators to talk about technical indicators and stuff like that without explaining why they work, you know? It's good. You got to be relaxed, Risco. We have to be relaxed, right? We have to be relaxed and realize that this business of trading as a retail trader, it's going to take some time. You got to be patient and you've got to be kind to yourself, right? If you're pushing yourself trying to squeeze money out of these markets, that's how they get you. They always get you the same way, right? It's always the same, right? It's like the market knows when you're desperate. It knows when you're scared. It knows when you need money, right? It's brutal, right? It's like a loan shark, right? It knows when you need money, right? It's not a genteel business. So we have to be looking after ourselves. So yeah, we're considerably under VWAP again. Let's see what happens here. I have these bigger levels, and 68, 64 and a quarter was a fairly big level on a longer time frame chart. I'm just going to post it. Let me go clean this up just a little bit and I'll post it. Redcom, hope you're feeling better. Hope you're getting rid of your flu. Alrighty, so I'm all set up. You can see that I haven't been the most organized. It's Monday morning. Actually, I woke up at 4:30 in the morning. I looked at the chart and I went, ugh, and I went back to sleep. So, uh, just be patient with yourselves this week, ladies and gentlemen. Please be patient with yourselves. No reason to get all nervous and anxious. It's a brand new month. It's like a fresh sheet of paper, right? So, let's see. Little distribution here. You can see they've got this and they're selling it here. We have sellers up here. Oh, good stuff. Well, you're in the room too, Redcom, so yeah, there's videos in the room as well. So now I don't trade when it's like this, right? It's not at an edge, right? I don't see a clear trade. I see the market taking what they bought under 68.79 and they're selling it at 89, right? So if I'm not positioned long under 79, I don't have any business being in there right now, right? If I was shorting, my stop would be up at 94 where that white line is, but I don't like to short distribution right at the lows of a market. Well, it's actually not off the complete lows. So if I don't have a clear trade, if it doesn't say, okay, JJ, buy this, put your stop here, and there's a good business reason to trade, right? There's no reason to trade this right now for me, right? So, I mean, if you're a larger trader and you want to build a short position, you'd use the high of K here, right, at 92, 93. That's where your stop would be if you were short, right? And if you see the offers coming up, right, you know there's going to be a seller here. That's right there. So let's, yeah, I've been looking at the market. I did my levels and everything, and then I went back to sleep. So let's look at the market, see where the buyers are, see where the sellers are, and see if we could do any business. If not, we could just always come back, right? Because the market never closes. It's a 23-hour market, right? This way, you're never forcing yourself to do business, right? You're never forcing yourself to do bad business, right? Because it's not necessary, right? Just relax, take it easy. It's Monday. Pretend you're in Vancouver and you work for the city of Vancouver. Everybody just comes into the office and has coffee and gossips, right? Nobody does any work. I'm gonna get angry responses from that, but that's okay. Hey Dave, yeah, it's a margin liquidation. If you look at Bitcoin, Bitcoin got spanked pretty hard. All of these assets, you got to remember that, especially leverage, right? ES is a leveraged asset, right? ES, NQ, all of these things, people trade them on leverage, right? Which means you borrow money from your brokerage firms. So when prices fall below certain amounts, you're auto liquidated or you're forced to liquidate. That's just business. You got to remember crypto. I'm sure crypto was the only market that was open this weekend, right? So they were selling in crypto, right? You have leverage, you have traders who are completely like, some of those crypto guys that they're like what, 1,000 times leverage they use, just crazy leverage, right? So you look at that. Do you see how the price action is kind of moving quickly back and forth like this, right? When you see stuff like that, ladies and gentlemen, did you guys see that? See how it's kind of moving up and down kind of quickly, right? What you got to do is you got to be careful when that happens because you don't want just to jump in and get stopped out. It might be a thin order book, all of those things you got to be careful about, okay? Got to be really careful with that kind of thing. If you see price starting to jump around a lot, stay out, okay? I mean, unless you're trading with a couple of $1 million and you know how to trade size. If you don't, do yourself a favor, right? If you look at the order book tonight, it's 20 aside, right? And it's kind of jumping a little bit, right? Those of you who are DOM traders, right? What is the important stuff that you should look off a DOM? Not the pulling and stacking and all that bullshit. What you need to do is look how quickly is price bopping around, right? Is it jumping around a lot? How thin or thick are the orders on each side, right? Cost basis is above us. So cost basis is 56 to 76. into 4 times discount is 68.41. You don't know what a thin market is? Okay, a thin market is when there are not a lot of orders on either side of a market, right? I'm just going to pull over the depth of market and you can see. Look, right? It's on sim because just in case I click into an order, I don't want to be in error. Look how thin it is. There's only 20 contracts on each side. You see how it's jumping up and down, right? In a thick market, there'd be 100 contracts per tick, right? But the market makers who have to make a market, what they do is they have to spread their capital over a longer range, so they're not going to buy as much at every tick. So what a thin market means for you, Mohammed, is that if somebody comes in with a 500 contract sell order, it's going to move price drastically. Or if somebody comes in with a 500 contract buy order and there's only 20 contracts per tick, right? You show this market any kind of size, it's going to move price drastically. So that means for you is you have to be careful in a thin market. Most of my advice in liquidations for new traders like this, if you guys don't know what a thick market is, if you don't know what a cost basis is, if you don't know what inventory is, use this time when the markets are bad to come into our trading room and I'll teach you all of the stuff that everybody's going to lose money this week. We will teach you how to avoid at tradingsyndicate.org, right? Steve's running a sale. You could get into the room and get our AI for $19. There's no better deal anywhere, right? And you will learn more with me in a month than you will in a year anywhere else, right? So while everybody else is out there losing money, screaming, punching their computer screen, why don't you take this time to actually learn the business so when the markets calm down a little bit in a day or two, you'll be able to apply it. Now watch, right? So if you were shorting right now, you see how the offer is moving higher? You see the red line? So what I want to see is I want to see this red line, which is the offer, right? I want to see it come up over this white line. Now, what does that mean? That means that the sellers see buyers and they're raising price. But if we get up to that white line and it gets violently hit down, then I know the sellers are competing there. That gives me market intelligence. See how we're creeping up towards it now? Creep, creep, creep. Right? We have a lot of inventory above us. We have 3 or 4 days of inventory above 69.10, 13. So watch. See? See how we came up right to that white line? Now let's see if we print over it. That means we've seen buyers, right? So if the sellers are raising price, you don't want to be short. Gold is 3 contracts aside? Oh man. Yeah, that would be the definition of thin, right? Yeah, if you don't know what a thin market is, you should not be trading in volatility, right? There's another reason why these markets are thin. It's because of electronic execution. In the old days, say Dave would call me and say, JJ, put in an order to buy. He'd call me, I'd call my trader, he'd call his broker would call me, I'd call the guy at night, Trimark, on the floor, they'd put the order in, the runner would go in, put the order in. To cancel that order, that whole process takes like 3 to 5 minutes. Now it happens, as you blink your eyes. So that whole order book empties out and fills in and empties out and fills in like microseconds. So a large order comes in, the whole order book just parts and price just jams one way or another. So that's how people get into trouble because they don't even know that that exists because they have no clue what's going on in the business. I'm like, how can you speculate in a business if you don't understand it? It's very dangerous, right? It's like me wanting to be a heart surgeon and I've never taken human anatomy, but I watched a YouTube video. Think about it. Yeah, I'll probably redo a balance zone, Dave. You know, I I was a little lazy and I used a larger one. See, next seller is going to be up here. So when you see the offer moving up, don't short it, right? Simple lesson, right? How do you use this? Had I been long, say I was long 72 or 84, I'd be selling here because I know others are going to sell here, so I'm going to sell alongside, right? You always sell when the other sellers are selling. Otherwise, they're going to take your client, they're going to take your customer, and no donut for you, right? Upper stops are 98 and 69.02, right? Now, I'm not saying this is going to happen, but what if, right? What if by the time RTH comes, we're already up at the previous day low and everybody's short down here? That happens too, right? Everybody gets carried away shorting down here, and the more people who short under 6,900, the quicker we're going to zip back up to VWAP. Right? There will be selling today, right? Then that's okay. Just relax. Remember, you don't have to make all your money in one day, right? If you don't understand what's going on, that's okay, right? It's okay. You know, the the most intelligent thing that a trader can say is, I don't know, let me go see. Right? You know, you always have these people, where's it going to go? What's it going to do? Blah, blah, blah. And if you don't tell them right away, they're like, oh, you don't know what you're doing. While, meanwhile, they're blowing up their accounts, right? So the most intelligent thing you can do as a trader is go, you know what? I don't know. I got to go watch. Let's see what happens, right? Look, there's a seller right there where I told you there would be one. There'd be a seller at an 89 too, and there'll be a seller up here at 6,900 and change, right? So right now, we're taking that liquidating inventory, right? It came into wholesale hands. The shorts covered here. The wholesale longs bought here. Retail's coming in here. And anyone who is short in here, if there's anyone short size in here, you're going to get a move back to VWAP, right? What I'm doing now is I'm looking to see where the aggressive seller steps in. Because this market has a nasty habit of running out of supply just when everybody gets short, right? So remember that. Remember that, remember that, remember that. Don't forget. Oh, excuse me. Okay, London should be opening here. There we go. Now, London usually opens and tries to shake out some inventory lower. So when London opens, we are going to find the bid at 8 o'clock in the morning, UK time. Just use the lines, watch the red line, and see if we can get down to these levels, right? If not, right? If London opens and it can't get lower, see how it's trying to get lower? See? Right? It'll come to a place where it'll like hit a wall and then it'll do this. If enough people are short, if enough people are short, the shorts will realize that they're in trouble and they'll come to buy back. So make sure if you are trading, put your sell orders out, my friends. Right? I bought three contracts at 97.33, and I'll sell them at 89, 89 and a quarter. Right? Just quick little scalps on the micro just to see if my brain is working. Right? Because why did I go long? Because I saw London come down here and it couldn't get down to this bottom of this candle. Now, I'm a quick trader, even though I'm a little half asleep here because it's Monday morning. So you take a quick little trade like that just to see whether your brain is working, right? And I always sell into strength because I don't know where the sellers, but what did I tell you, right? I said if enough people short here, right? If enough people short here and add to it here, when they go to buy it back, the people who are long here are going to yank price up. And that's exactly what's going on, right? You'll never be able to, no matter how much you explain away macro and things like that, you'll never actually be able to trump, sorry, not to use that word, or beat the mechanics of a market, right? There's just no getting around it. The market has mechanics. It's based on transactions. It has nothing to do with indicators, right? It is the business of the day. So these single prints, thanks Dave for letting me know, right? We've got single prints here. These are areas of supply, and the market stopped there to the tick. Boom, 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 right? So if you understand how this works, it really, really helps you manage and work with real information instead of, phantom indicators and stupid concepts and, all of that stuff. You actually have information that you can use to make money, right? I told you we were looking for the bid. We found the bid just here, right? We found the bid at 95, right? Up, and now we're going to sell into it, right? I told you there was going to be a seller there. The seller was there pretty much to the penny. Look, right? So if you were long here, right, you know that there's going to be a seller there. Take your profits, right? Just be smart about it, folks. Don't try and be a hero in these markets. It's not about, telling people how much you made. It's about being able to pay your bills. For us, right? We're not hedge fund managers, you know. We just want to pay our bills, make some money, relax. If we run out of supply, we're going to go into this red box. You can think of this as a storage room for ES contracts, right? We've got, that's where the supply is. Yeah, you got to wait. You got to wait for the edges, especially if you're a new trader. It's so easy to get sucked in. Now, I'll take scalps away from the edges because I've been doing this for 34 years and I'm fast, right? But if you're not fast and if you panic when you're in a trade, when I go into a trade, I already know where I'm getting out of the trade, right? I know exactly where I'm getting out of that trade and I know exactly why the trade is happening. Why is this happening? Because people shorted here, added to their position. Look at these four big green candles, right? We went from 91, 69.05 in 4 minutes. Why? Because of short covering. But if you're long, you sell into the short covering to cash up, right? Very simple. It's not rocket science. It's not rocket science, but you have to understand the business. You don't have to know how the algos work or how markets are made, but you do have to understand that it is a market. Right? That's all. And we'll teach you. All right. Oh, okay. What's next? A little back and forth here. All right. So we have sellers at 94, at 69.04, half. You can expect some selling at VWAP, right? So I don't like to initiate trades at VWAP. I like to get out of trades. So had I been positioned long at 88, right, I was a little high when I took that trade, right? But if I was positioned long, I'd be out here, right? 88 to 60. You could take 5 points, folks. 5 points on one E-mini is a beautiful trade, right? You know, I'm not going to kick that trade out of bed for eating crackers, that's for sure, right? 5 points on one E-mini, right? Once you know what you're doing, $250, you put on 8 contracts, and that's a $2,000 trade, right? And I know that you guys are not making $2,000 a day, right? Learn how to do it, make $20 to $50 a day using the micro, right? Then start scaling it once you get some skill, right? Right? This is a business about skill, right? And we'll help you develop that skill. Yeah, exactly, right? Front rudder, exactly. What do I do when I see that after I sold too early, it was my plan to wait until London open, but always getting a little scared? I would need 5 points to have a profitable one-to-one RR in the long run. Well, I don't use RR TradeMaker, as you know, right? So when I take a trade, my risk is based on the business. So for me, right, when I take that trade, right, say I went long here, for example, right? Let's use a real world example. Say I went long, let's say I went long here, right? My stop is going to be just under here. Because here's the thing, if the business reason for my trade holds true, then the inventory should not go below 93. Okay, so your risk is there. Now, what do you do with those orders as soon as you're long? Did you have your sell orders in the system? If you have your sell orders in, they will tell you whether the trade is working. So say you buy 3 contracts here. Put a sell order here, a sell order here, and a sell order here. If this one gets executed, great. If this one gets executed, great. If this one doesn't get executed, hit the bid and get out. Try doing that on the sim. Try putting in your orders, like, because what I do with my coaching clients is I do the same thing. You put in your buy, you put in your stop. As soon as your buy order gets executed, boom, you're on. You put your sell orders in, right? So your sell orders tell you whether the trade is working or not. And it's a little scary sometimes because when I first started trading, I wanted to, oh, I'm up 2 points, get the hell out, right? This is like, because after you lose money all the time, right? When you start making money, you're like, just take it, take it, take it, take it, right? After a while, you'll start getting a bit more comfortable holding trades because then you'll understand too there's different kinds of price action. Some days the price action is really, you know, really fast. Sometimes it's a little slow. Sometimes it's really shaky. Does that make sense? The best technical indicator is using your orders to let you know whether the trade is working. And that's how traders have been trading for centuries before all of this fancy gizmos that we have, right? Your sell orders tell you, okay, you're long at 5, you got a sell order at 5.25, 550, and 575. 5 quarter gets taken, boom, execution. 550, boom, execution. 575, uh-oh, SpaghettiOs. There's a seller at 570, 74, 73. So they're not letting you get to 575. They're like a goalie. They're like Ken Dryden in goal. Little old hockey reference for you Canadians. Right? They're like the goalie. They're keeping you from getting to 575. So boom! You hit that bid and you walk away. Right? This way you're never caught by surprise. Right? You're prepared. You're not sliding your stops all over the place. You let your sell orders do the talking, right? And the same when you're short. When you're short, you put your buy orders in, right? So as the market goes down, you can cover. If your buy orders don't get hit, the buy orders are trying to tell you, psst, psst, nobody needs to sell that low. You're going to have to move your price up. Hey, Moran, how are you? Hope you had a good weekend. Right? That's the best word on the street is actual participation. That's how traders have been trading for centuries, before all this fancy stuff. Hey, we're always wrong. We're all wrong, trade maker. Don't worry about that. You know, we all have. We're going to be wrong a lot in this business. The thing is, admit you're wrong quick, stop the bleeding, get out, wait for the next trading opportunity. Right? This is the only business where we can insure our transactions. Right? This is the only business where you can go into a business transaction and insure it, meaning I can get some of my money back. Right? I can get some of my money back. Right? This is the only business where we can insure our transactions. And where do we get our money back? When the business isn't working anymore, we have the ability to get out of the trade. So that is a business expense, our stops. And listen, in these markets, I mean, okay, AO said some fund manager bought gold at the high and just took a $300 million hit. You'll hear that, right? You'll hear crypto guys, right? I bet you the gray market watch dealers are going to be pretty busy this week, right? Everyone's going to be selling their Audemars and Patek Philippe's and Rolexes this week to beat margin calls, right? Hey, I'm laughing because I've done it, right? You know, who here has never had to sell their Rolex, right? Hey, that's life. It's just, material things, right? So it's just a business, right? It's a business. Sometimes business is good, sometimes business is bad, right? The thing is, this is a business where it's instant, where you instantly get kicked in the head. So what we try and do is we try and really, really save you from that. Like right now, what's going on? Like, can anybody tell me what's going on here? Right? We have inventory here and inventory here that was accumulated, right? So we're going to distribute it here. Right? There's sellers here, so we'll all kind of hang out and sell a little bit. If we start competing, then we'll come back down to 88. But right now, they're just gently selling back and forth under VWAP. Right? There's not enough oomph to get over 18, but there's enough buying under 6,900 that we can take what we bought here and what we bought here and slowly get rid of it and turn it into cash. Right? That's what a market is for. It's to turn inventory into cash and then to buy inventory again and turn it into cash. That's why we don't get married to our trades, because it's temporary. Right? Make sense? You guys with me? Right? You don't get married to these trades. It's speed dating. And as soon, as soon, oh my God, sorry. Can I tell this story? I don't know. I once went out on a date with this girl, and we ordered a bottle of wine, and we were talking, and I still had like 3/4 of my glass left, and I noticed that 3/4 of the bottle of wine was gone. I was like, uh-oh. Right? You got to extricate yourself from that situation, right? Before things start, before things start getting froggy, you got to get out of there, right? So that's what you're doing when you're trading. When things start looking shaky, you got to get out, right? You can't just stand in there and hold the pain. That's why we have a business reason to take the trade. We have a business reason to get out of the trade, right? So you're not stuck, and it doesn't turn into that movie with like Bruce Willis, Blind Date, if you guys remember that movie from the 80s. Oh, boy. Oh. See how it's just going back and forth between 69.01 and a half and 69.05? This, my friends, is distribution. They just stop selling when they get down here and raise price because there are buyers underneath, right? Remember those short sellers? They're still short. So as the market comes down, they'll see a big buy order and they'll walk away from it. Right? And this is done all electronically now, so it happens really quickly, right? And it's so efficient, right? The business never changes, right? Algorithms and those things, all they do is they make the delivery of product faster, more efficient, right? Just like robots in a factory. Look, we caught a bid. Let's see where we're going here. 8.5. As we creep on VWAP, right? There should be a seller. There should be sellers somewhere in here. Let's see where they are. Previous day lows here, my friends. What did I say at the beginning of this? I said we might even not have a gap. Remember? You remember, right? Look at this big green candle. You think somebody's short? Hello. Right? 69.01 and a half all the way. That's a big candle for a 1-minute candle. That is a short cover. Right? That is a short cover, right? Short covering, short covering, short covering, pause, short covering, short covering. The position is now underneath us, right? The overnight inventory is underneath us, right? And overnight inventory is short, so the move is up. Get it? Yes? No? Don't worry, you will. Now, what happens to those poor shorts if at 9 p.m. we open at 69.36? Remember, crypto got hit over the weekend. Okay? So, what was the only thing people could sell? Can I say what again? So, crypto was the only asset that was trading. So they sold that, and as soon as the ES opened, they sold that too because they were leveraged, right? So inventory is underneath. Inventory, Muhammad, is, have you ever worked in a store, right? Or have you ever like gone to a store and bought something, right? Well, they have an inventory of goods and they paid a certain amount of money for it. So there's an inventory and it's got a cost basis. When buyers come in, they raise price and they sell that for profit. But if enough people short here, like this is where people go long, but if enough people short here, then you get a move like that when they come into cover. I teach you this in my room, right? We do videos on this, we do execution. Look, we're going into VWAP. Now, wouldn't it be a hoot if we get above VWAP, right? Wouldn't it be a hoot? Coin of bitterness, people, you're looking for 77,755, 745, that area. That's where you're going to see some resistance. You're seeing some buying. You know, as the bottom fishers are coming in, right? It's going to be ugly for a little while this week, right? See there, we're right at VWAP, right? There's going to be a seller here. There should be. If there is no seller at VWAP, I'll be really surprised. Because if there's no seller, it means the sellers went, holy crap, there's buyers. Let's sell at 18, 14, 15, 16, 18. Inventory, John, is real simple. It's time and volume traded, right? I know it's really hard to visualize because you guys have never sat on a trade desk. You guys have never had to sell 5 million shares of a stock during the day, right? So every trader has an inventory. The market has an inventory, right? So if you move the market lower, right? I'm sorry about that. I know. Thank you. I just noticed that I'm on a 5-minute chart too instead of a 1 minute. If you move the market lower, right, you're going to have liquidation. That liquidation is from people who are trapped above, right, John? So that is bought just like a used car lot, and that is establishes your cost basis. And then you go to sell that at a higher price. Sorry about the 5-minute chart, folks. Apologies. See, it's Monday morning, right? As my mother would say, I'm a little slow on the uptake. And you guys are just as slow as I am because it took you a whole hour to notice. Oh, boy. Does that help? So inventory is just time and volume traded, right? So this is your inventory, right? Your inventory is here, and we're selling it here for profit. It's one of the simplest concepts in markets that is never talked about in trading rooms because most trading rooms are run by people who have never traded professionally, right? So when you start at a brokerage firm, they give you an inventory to put your, you know, you have an ES inventory, you have an inventory for your stocks, you have like the storerooms, right? And the market itself has an inventory, right? So overnight inventory is short because most of the trading is underneath Friday's close. That's why we're getting this short covering move up, right? So if you were long 6,900, 6,904, when we got to 6,910, you know there's going to be a seller there, right? Once you know there's going to be a seller, that's where you get out, right? Does that make sense? So if you want to learn how to trade using common sense, right, without any double talk and all this mumbo jumbo that people use, right? You won't hear me talking about delta and unfinished business and all this nonsense, right? I use simple, plain language to teach so you can actually use it to execute, right? Because I am not in the school of thought where you have to baffle them with your bullshit if you can't dazzle them with your brilliance. I want to keep it simple so you guys can actually trade and make money, right? Yeah, it's got to make sense, right, John? It's got to make common sense because it's a business, right? This chart is nothing more than a sales chart. And what it does is it tracks the acquisition and distribution of inventory. So if we were looking at this going, this is a 5-minute chart of the sales of oranges. So this is where we bought our oranges, right? Because people didn't want them. We bought our oranges and we're selling them for profit. Very simple, right? Because execution is not simple. Execution is a pain in the ass, right? Right? Execution is difficult. It is not at all easy. So we want to give you tools where you can execute without having to overthink everything. Because that's when people get into trouble. They're trying to, oh, I need to like look at this market while I'm trading this market. I need to like, you know, balance on a skateboard while looking at this technical indicator and, moon cycles and all. Just look for where the buyers are. Look where they stop selling. Keep life simple, right? Let's make some money, right? When we're wrong, we admit we're wrong quickly and get the hell out, right? And if you don't train yourself to do that, it's very hard. A lot of this is all repetition. This is not rocket science, it's repetition, right? That's all. That's all it is. We do the same thing over and over and over and over and over again. It never changes. Hasn't changed in thousands of years. Hasn't changed since the first caveman ran out of rocks. Price of rocks goes up, right? I'm redoing my balance levels for these 1-minute candle wax charts. It's like driving, right, Dave? It's like anything, right? You went back to work today, Ian? Yeah, and exactly, Raj. Not everybody sells at the same time. And that is it for me this morning. We will see you folks at 9 a.m. Eastern. I'm here twice a day. Our trading room is tradingsyndicate.org. Thank you folks for being with me. Please be careful. It's a fresh month. If you don't know what you're doing, don't trade, right? If you do know what you're doing and you start getting stopped out, just chill out. Message me if you're having trouble, right? Just be careful out there. It will get better. There'll be some good trades because of this liquidation. Just stalk your prey, right? Remember, we're the predator, not the prey. Okay? Thanks, everyone. Stay safe out there. Appreciate you guys. And we'll see you at 9 a.m. Eastern Time. Bye for now.